Tesla is no longer just an EV company. Tesla has entered a new civilization phase. And once you truly understand what that means, you will never look at TSLA the same way again. Hi, this is Ken. Today, I want to connect three developments that most people are looking at separately. Tesla preparing full self-driving for China, unusual institutional positioning in TSLA options, and Elon Musk talking about a future where energy becomes the ultimate form of value. If you can see how these three threads connect, you'll start to understand where Tesla is actually going. This is not about next quarter's deliveries. This is not about temporary stock price moves. This is about Tesla quietly positioning itself as one of the core infrastructure builders of the next economic system. Let's start with China. Tesla has begun hiring autopilot test engineers in Shanghai. On the surface, this sounds like a normal hiring headline, but it isn't. This signals that Tesla is moving from research mode into operational deployment mode for FSD in China. China is the largest EV market in the world. It is also one of the most complex driving environments on Earth. Dense traffic, highly mixed road users, aggressive lane changes, constant construction. If full self-driving can operate reliably in Chinese megacities, it can operate almost anywhere. China becomes the ultimate stress test, and passing that test means Tesla moves much closer to a truly global autonomous driving system. Here's the key point most people miss. Tesla is not trying to sell cars. Tesla is trying to sell driving as a service, driving as software. Once FSD reaches maturity, every Tesla vehicle becomes a monetizable AI-driven asset. Software scales. Manufacturing does not. When you ship a physical car, margins are constrained by materials and labor. When you ship software, marginal cost approaches zero. That single difference changes the entire business model. Tesla stops behaving like an automaker. Tesla starts behaving like a global software platform. Now, let's talk about the TSLA options market. Recently, traders noticed an unusually large put position around the $240 strike price with a very high volume to open interest ratio. Many retail investors immediately jumped to the conclusion smart money is bearish. That conclusion is lazy. Professional capital doesn't think in one direction. Institutions hedge. They hold long-term positions and they buy downside protection against short-term volatility. This is risk management, not conviction collapse. In fact, hedging only makes sense when you care about preserving a large position. You don't hedge stocks you don't believe in. You hedge core holdings. So, what does this likely tell us? Big money still sees Tesla as strategically important, but they expect turbulence along the way. That's it. Long-term belief plus short-term caution. Both can exist at the same time. This actually supports the idea that Tesla remains a structural long-term bet, not a fading story. Now we move to Elon Musk's comment about future currency. He said that in the future, value will be measured in mass and energy, not dollars. At first, it sounds philosophical, but it's actually very practical. Everything we produce requires energy. Factories run on energy. Data centers run on energy. AI models run on energy. Transportation runs on energy. Energy is the base layer of civilization. Money is simply an abstraction we use to measure access to energy and productivity. If energy becomes abundant, the foundation of value measurement shifts, not because money disappears, but because energy becomes the true underlying reference. Now connect this back to Tesla. Tesla builds solar generation. Tesla builds grid-scale batteries. Tesla builds AI chips. Tesla builds autonomous systems. These are not random product lines. They form a vertical stack: energy creation, energy storage, energy optimization, AI decision-making. physical execution through robots and vehicles. This is a closed loop. Tesla is trying to build a system where AI controls energy and energy powers AI-driven productivity. That is a fundamentally different ambition than selling cars. Think about Robotaxi for a moment. A Robotaxi is not a vehicle. It is a machine that converts electricity into economic output, energy in, miles driven, value out. Scale that globally, and you get a planetary productivity engine. That's why autonomy matters so much. Not because it makes driving convenient, but because it turns transportation into programmable infrastructure. This is also why traditional valuation metrics keep breaking. Price to earnings was designed for industrial companies. Tesla is morphing into something closer to a hybrid of energy utility, AI platform, robotics manufacturer, global mobility network. The more accurate KP is going forward are things like autonomous miles driven, AI-controlled devices deployed, total energy storage capacity, total energy generation capacity, network utilization. These metrics describe infrastructure, not consumer products. So what does civilization phase actually mean? It means Tesla is no longer focused primarily on individual products. It is focused on building systems that other systems depend on. Just like the internet became the base layer for digital civilization, Tesla is attempting to become a base layer for physical, AI-driven civilization. Energy, mobility, autonomy, robotics, all integrated. This is a multi-decade project. Now let's ground this back in the stock. Today, TSLA trades around the low 400s. Short-term price movements will always be noisy, but the real question is simple. Do you believe Tesla will remain mostly a car company, or do you believe Tesla will succeed in becoming an AI energy infrastructure company? Those two futures lead to radically different valuations. Some people will look at this vision and say it's unrealistic. That's fair. Big visions always sound unrealistic early, but it's also worth noticing something. Tesla already builds many of the required pieces: solar, batteries, AI hardware, autonomous software, robots. This is not a concept on a whiteboard. This is a system under construction. As a long-term investor, my job is not to predict next week's price. My job is to identify asymmetric futures, scenarios where the upside massively outweighs the downside. Tesla still fits that profile, not because it's easy, not because it's guaranteed, but because the scope of what Tesla is attempting is enormous. Tesla is no longer just competing in the EV market. Tesla is competing to define how AI, energy, and physical reality integrate. That is a civilization-level competition, and that's why I continue to watch Tesla closely. That's why I continue to invest, and that's why I continue to share these long-term perspectives with you. If this type of deep, future-focused analysis is useful to you, make sure you're subscribed. Here, we don't chase headlines, we connect the dots, we look forward, and we invest with a long-term mindset. Thanks for watching, and I'll see you in the next one. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.